Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to show you a particular indicator that has only flashed 3 times in the history of Bitcoin. It has never been wrong, and it has always flashed at the bottom of each of the previous 2 bear markets. So we're going to have a look at that. Extremely interesting. You've got to sit down and take notes on this one. I'm also going to look at the 60-day cycle and ask the very difficult and uncomfortable question: have we already bottomed out on the 60-day cycle? And if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, before we begin, the usual polite reminder: please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions. Okay, so with that out of the way, we'll go straight into this particular indicator, which is showing for the 3rd time in 12 years exactly where we are with Bitcoin and what we can actually expect over the next 2 to 3 years. So if I showed you this chart over here, this is on the monthly chart, the BLX, and I said to you that I've got an indicator which told you that this is the point here in this box to actually get into the Bitcoin, would you have taken that trigger? Of course you would, because that trigger was right at the bottom of this bear market at the end of the first cycle over here. And if you measure from this indicator here, from the bottom of this to the top of that market back in 2017 up here, that was nearly a 10x from this indicator. So what is this indicator that flashed here back in 2015 for the first time in Bitcoin history? This is the indicator here called the Fisher Transform. If you want to have this on your charts, then all you have to do is go to the indicators over here, type in Fisher Transform, and it's the one by TradingView here. So as you can see, this was the bottom. So you can see the bottom dotted line, once we'd crossed down there and then started to cross back up, this was exactly the bottom of the bear market at the end of the first cycle. So let's see what happened in the second cycle. So this was the second cycle. Top was 2017 December, the bear market, and guess what happened with the Fisher Transform indicator here? Right at the bottom of that bear market, it gave the signal to get back on board. And what do we have now? And we've just had a bear market, and what did this indicator do for this bear market? It's done exactly the same. The third indicator on the third cycle at the bottom of the bear market, it hasn't let us down. Look at this, what's happened here. We crossed over right on this candle here, which was the January 2023, and we're right at the beginning of the next bull market over here. So you may be asking, what is this Fisher Transform? Now, many of the indicators have given these types of signals for like 5 or 6 or 7 times, but this one is an incredibly rare signal, yet you only get at the end of a bear market. And the next cross you'll get down here will be when we've gone up there and had another bear market, and you'll see another cross there. So it's the one that actually gives you the very bottom of the bear market at the end of the cycle. And that's why it's an incredibly powerful tool to use if you're doing the cycles like I am. So if you have a look at exactly what this Fisher Transform indicator is, so this indicator was actually created by John F. Ehlers, and what it does is it converts the prices into a Gaussian normal distribution. Now that sounds very technical and very jargonistic, so I'm going to go through that in a second, but the indicator highlights when prices have actually moved to an extreme based on recent prices. And what this does is it may help to spot turning points in the price of an asset, as I've just shown you. But what this does is, instead of being a lagging indicator, this actually is one of the leading indicators to tell you exactly where the price is heading. So as you can see here, this technical indicator is commonly used by traders looking for leading signals rather than lagging indicators. And it can also be applied to other technical indicators such as relative strength index. or even the MACD. So this is an incredibly powerful tool to signal the bottom of a bear market. It's basically telling you if you're in it for the long term, you just get on that train and you basically wait for the top of the bull market at the end of 2 to 3 years. So just go on holiday, come back in 2 to 3 years time, and then just get off the train and then go back on holiday afterwards. It can't be much easier than that. So what is this Gaussian distribution? Well, this is the formula that it actually uses. Now it's obviously very complicated, but the fact that it uses a certain formula to work out the actual price prediction, it tells you that there is a method to the actual prediction here. And we don't really need to use this formula, it's just to know that there is a formula in the background to it. And all we need to know is, do we get in at these points? So we know that at the next bull market end and then the bear market, this is a signal that's going to be flashing somewhere down the line in 2 to 3 years. But while it's flashing now, we need to take advantage of it here. Okay, so I hope you found value in that. And if you did, then please do remember to like and subscribe if you haven't already done so. Okay, just moving on to the 60-day cycle. Okay, so one of my Twitter comments and tweets was one of these here. And it said here, as mentioned in my video yesterday, that was on the Monday, that we can expect a counter trend rally to the EMA 8 on the way down. And I'm still expecting the continuation to the downside unless we can close above 29,200. But the higher probability is to the downside on day 46 of 60-day cycle. So this is where we were. This is the counter trend rally I was talking about. And this is the 8 EMA, the blue line. Because whenever we have a fall, the Bitcoin price has a very high affinity to come back and retest the 8 EMA before being rejected. And this price here was around about 28,200. And if we'd have gone above that, that would have been an odd signal in a downturn when we expect a rejection at these prices here on the 8 EMA. Fast forward a few days and look what's happened. We actually had an indecision candle right on the 8 EMA there, because it was trying to decide whether it's going to actually end the cycle over here or it's going to come back down. Well, so far, let's just take these yellow lines out. So that indecision candle was telling us where it's going to be going, and still we haven't gone above that candle or below that candle, so we're still within the realms of the high and the low of that range yet. However, as you can see with this candle last night, so this candle here closed at 29,485. The reason why I picked the 29,200 was because of the bottoms of this candle here. If we should get above that, which was at 29,200, and that's exactly what we did, then there was a high degree of probability that we've actually bottomed out on this candle here on day 45. So whilst that's the first signal that we may well have bottomed out here, if you're looking for a confirmation of that, the second signal would be to close above this long-legged doji, very indecisive candle, as it was rejected at the high and it was rejected at the low. And it's settled right in the middle. So it's what they call so this is what you call a long-legged doji candle. So it's got a long leg at the top and a long leg at the bottom. So once we get past that, and the high of that is actually at 30,022. So if we can close above that, that would confirm that this is the actual low of the cycle, and we're now moving into the next cycle. So this red line will be moved all the way up here. If you're an aggressive trader, then you would use this first signal that it's gone above the 29.2, and that's it, you get on board here. But if you're looking for a safer bet, then you'd wait until it goes above the 30,000, above this long-legged doji candle. It's quite interesting that I've been mentioning this green line for the last few videos now, and this is an incredibly strong line. As I've shown you before, they found a lot of support from here, and then it turned into resistance along here. When we broke above it, we've now suddenly found support all the way along here now. So looking at that, when it came down here, I mentioned to you that you've got to be aware of this green line, that we may well find support before bouncing back up again. And that's exactly what we've done here. So let's see if that was the bottom. It does look like a tentative end to this 60-day cycle on day 45. The other thing I'm actually looking for is obviously the FOMC meeting on Wednesday coming up. So currently we're on day 49 of this cycle here. So this is where we are on day 49, and on Wednesday we will be on day 54. If by then the price doesn't come to test these levels over here, then we can surely say that We should be above this price then by then, and then judging by what the decision has been made on the interest rates, we should be able to be in a good position to ascertain and to confirm whether we've bottomed out and that we're part of the next cycle up. So only time will tell, but very, very interesting developments over the next few days. I want to just mention about the Bitcoin miners. Last week, I gave the Bitcoin Miners Club members a unique signal of the next swing trade, where it's likely to top off and when to get back on for the following trade after that. This week, I'm going to highlight one of the main signals that showed the very bottom of one of the Bitcoin miners in the bear market. So that was the signal to actually get back on board, and that would have actually meant that you would have got maybe 300, 400 and a 500% increase in your portfolio. That signal in the next bear market should mark the reference point of when to get off the bull market train on the Bitcoin miners in 2 to 3 years' time. And we need to know them now because we know exactly what to aim for. That will be our objective. And we need to know those signs now so we know exactly what we're aiming for. And if that is the kind of thing that interests you with the Bitcoin miners, then all you have to do is click the join button below all of my videos here. And if you're on a handheld device, there is actually another join button over here in the description box. So you can actually join the Bitcoin Miners Club here. And what you get with that is one exclusive video every Wednesday to cover technical analysis, swing trades, and much, much more on a weekly basis. And since we started this Bitcoin Miners Club, if you have a look at some of the comments, this is what the members of the Bitcoin miners have been saying over the last few weeks. One of the members here created a portfolio for the Bitcoin miners only 2 weeks ago, and he is currently 23% up on one of the Bitcoin miners I highlighted in one of the features that I did over the last few weeks. And if that's the kind of thing you're interested in, then all you have to do is click the join button below all of my videos and you'll have access to all the exclusive content since we started only a couple of months ago. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.